What's up, everyone? It's Caddy with Money Investing. So again, a very strong green day for the markets. Nasdaq closing in above 12,000, S&P closing in above 4,000, and the Dow pushing up to over 32,800 points on the day, and the yields just a little bit over 3.5%. So tomorrow we've got big inflation numbers coming out. In this video, I'm going to break down the Fed's balance sheet, which came out just a few hours ago, as well as the GDP numbers, the final GDP numbers for the fourth quarter 22, and the initial jobless claims, as well as the entire market update. But tomorrow, we've got the inflation numbers, the Fed's preferred measure of inflation, PCE numbers, personal consumption expenditure, coming out at 8:30 a.m. Eastern. I will be going over some consensus in this video. As always, if you enjoy it, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And the link to our Discord and Patreon is going to be down below if you're interested in joining us. 2 more days left to take advantage of that 16% annual discount. And after that, that annual discount does go away. So link's going to be down below if you're interested in joining. Now, the markets were quite interesting today because we did sell off during the day. We kind of came down to fill the entire gap. And then the buyers once again stepped in towards the last 2 hours to push us back over 12,000 on the Nasdaq, push us back over 4,000 on the S&P. And the Dow Jones also coming down to fill the entire gap and then getting bought up to pretty much close to where we opened. So there was a lot of indecision intraday, some volatility with sellers kind of dominating the first half of the day and buyers closing in strong to finish out the day. So this is the Fed's balance sheet. So we did increase the Reserve Bank credit by about $38 billion, but total assets did decline very, very slightly, $27.8 billion. And this is primarily because the Reserve Bank credit, which is the bridge loans that the Federal Reserve is providing to other central banks and other banks all over the country, has gone up. But the Treasury securities and MBS, which they are rolling over as part of their quantitative tightening program, as part of their program of actually tightening financial conditions, and they're rolling off of their balance sheet, is coming down. So there's like both of them going on at the same time. You've got securities, debt securities, treasuries, and mortgage-backed securities coming down, and Reserve Bank credit going up. So as a result, net, we are very unchanged. And in the grand scheme of things, 27, 28, $38 billion is actually quite a small number for the Federal Reserve. So if you see it on the chart, you'll notice that we did decline just a slight bit from 8.72 trillion coming down to about $8.7 trillion in total assets on the Fed's balance sheet. So that's a good thing. We are now starting to level off once again. Of course, we've been declining for the last half of pretty much the entire year. Then the last few weeks, we pretty much spiked by $400 billion. That's how much money the Federal Reserve printed and gave away in reserve credit to all these bridge loans and all the other banks. And now we're starting to roll right back down, as the volume of these loans is a lot less than the volume of securities maturing. This right here is going to be corporate profits. This also came out. So after tax, year-over-year corporate profits in the fourth quarter did decline by 1.4%. So that's why the earnings were also lower in the S&P 500, something that we have to absolutely be paying attention to, because at the end of the day, the markets are driven based on where earnings are going. And if corporate profits are declining, that's not a great sign. We already know that earnings recession is going to be somewhat likely after the first quarter 23 earnings are released, which are also, in my opinion at least, are going to decline on a year-over-year basis. This is jobless claims. So we came in at 198,000, which was much higher than the prior week and also higher than the consensus. So we are seeing a little bit of a higher uptick in the initial unemployment benefits filed in the US. And this is the GDP numbers came in at 2.6% for the fourth quarter 2022 versus the consensus of 2.7 and the prior number of 2.7% as well. So economy still seems to be very strong, especially in 2022 basis. A lot of the weakness, a lot of the cracks have been starting to show up this year in 2023, and more specifically in March with the bank failures and all the crises. So it's going to be very interesting earnings season when it begins at the end of April. This is the big report that's going to be coming out tomorrow. So that is the PCE, personal consumption expenditure, month over month and year over year, and core PCE. And the expectations right now are for 0.4% increase on a month over month basis, and year over year for us to drop down from 5.4 to 5.1%. That's the consensus going into tomorrow at 8:30 a.m. Eastern. And core PCE month over month to increase 0.4% also, and year over year to stay steady at 4.7%. Now, considering the CPI numbers and considering the PPI numbers, which were, I would say, relatively okay, they weren't terrible, but they were also not kind of like home runs. I would expect these numbers to get hit, and I would expect core PCE to come down to 4.7%. And if that happens, well, it'll be a time where inflation is actually higher than core PCE. So we actually have interest rates that are positive on a real basis. When it's adjusted for inflation, they are positive for once, right? One time in a long time, because for the longest time, inflation's been obviously much higher than where interest rates were. So right now we do have positive yields, not really positive yields, but positive interest rates, which is the Fed funds rate. Now, another report that suggested assets in money market funds touching of over $5.2 trillion record. So investors hunting for yield in cash-like investments poured another $66 billion into money market funds this week, bringing total to a record $5.2 trillion. And the bulk of the weekly inflows at $71 billion went into government funds, which invest in cash, treasury securities, and government-backed debt. Overall, asset holdings, however, were offset by $5.4 billion weekly outflows to prime money market funds. And heavy inflows to money market funds have been a major focus in March after the run on deposits and the collapse of Silicon Valley Bank and Signature Bank raised concerns about the stability of the U.S. banking system. And strong flows to the U.S. government money market funds continued this past week, pushing total assets for all money funds to a new record high. So eventually, we're going to see a lot of allocation away from money market funds eventually to other assets. It's all about liquidity. It's all about where the money is going, right? If we can figure that out, we can figure out where the next opportunity will be. And just as we talked about in our previous videos, where a lot of the money out of deposits went into treasuries, I've already done several videos on this, right? Prior to the money actually going into treasuries, this was one of the reasons why I was long on TLT TMF. Eventually, I do also believe that this money will rotate back into equities, which is where the opportunity could be in the medium to longer term. But of course, a lot of it depends on what happens with the macros and, of course, the recession playbook and a lot of other factors that go into it as well. So this is the heat map. Amazon green, Meta, Nvidia continues to push higher. AMD was also up a little bit. Microsoft, Apple pushing higher. So a lot of big tech. Google continues to underperform in the last couple of days. Energy was still kind of flat here. Healthcare up. We had consumer cyclicals, defensives pushing higher, materials, real estate all pushing higher, with banking and financials still struggling a little bit. So they were down collectively, especially regional banks, very, very red, as well as biotech also selling off. So on the day, we had financials as the worst performing sector, and all other 10 sectors in the S&P 500 were green. In the last 1 week, we've got only one sector underperforming, and that is comm services, and that is Google and your Meta and your Amazons, like all those companies, and everything else, all 10 sectors really, really green in the last 1 week. Over the last 1 month, though, technology and comm services are the two leading sectors, and it's been a very, very flat month and pretty much a flat year for the S&P 500. Sugar prices green, cocoa prices, orange juice, feeder cattle, lean hogs, everything pushing higher, with wheat, crude oil, and oats coming down. And Bitcoin just a little bit past 28,000, and Ethereum also pushing past $1,800 at the moment. So going back over to the markets, volatility is again stable at just over 19, down a little bit over 52 basis points. Crude oil here continues to push higher, back over $74 per barrel, and that was one of the reasons why energy stocks were doing better than financials today, because crude oil continues to push up, and that benefits energy stocks in a big way. And this right here is going to be a new support level to watch for crude, and the next resistance and the target's going to stay put at 81, close to $81 per barrel. Ethereum just consolidating sideways, and Bitcoin also pretty much at just over $28,000. I will be doing a video, more dedicated, more separate video for members only, on what my plan is with cryptocurrencies. I've been doing some research and been studying a lot about offline hard wallets for cryptos, and that is where I'm kind of leaning more towards. And as I've already mentioned, there is going to be some element of diversification. It's not like I'm going all Bitcoin bull and just like all in or anything like that, but just with a very, very small allocation and having that diversification opportunity with another asset class. So we'll be looking into that as well, and we'll be sharing a more separate, more detailed analysis on what my plan is, and what software, what company I'm going with respect to holding and storing some Bitcoin for the future. Next up, we've got the markets. So S&P 500, once again, getting a nice rally up, 4,050, 0.5% green. We've got a big resistance for us sitting at 4,100 to as much as 4,200. So inside this red rectangle, we are pretty much at that level not too long ago. And going back as far as January 31st, Michael Burry also said on Twitter, sell. And then yesterday he said, or pretty much today, this morning, he said, I was wrong to say sell. I did a video about it. I actually did a live stream and then posted it as a video because YouTube was having some problems with processing videos. But definitely do go ahead and check that out if you haven't already. But right now we're getting back up to those levels for the S&P, 4,100 to as much as 4,200. That range, that 100-point range, is going to be very, very important and interesting for S&P 500 moving forward. And support level is going to stay put at 37.74, 37.75 for S&P 500. Talking about the NASDAQ, and NASDAQ here also pushing up a little bit over 12,280. So this right here is going to be that level to watch as a big resistance that we are approaching for the NASDAQ as well. And again, tomorrow's inflation numbers, next week's employment report, and earnings season getting started in April. A lot of things to look forward to. We don't have a Fed meeting, but inflation's coming out on April 12th. So we still have a lot of economic data to look forward to in April, despite not having the Fed meeting. But resistance, 12,280 for the NASDAQ moving forward. Next up, we've got Apple. And Apple has also been on a very nice, consistent move up. 162.36, getting a nice breakout and continuing on that momentum. And the resistance next is going to be all the way up to 177. That is the next target that we are watching for Apple at the moment. So 177 is going to be that level. And support level is going to stay put, of course, at around 157, 158. Talking about Amazon, Amazon also was green. We are still in the context of this downtrend, so we're still very much in a lower high and lower low pattern. And resistance is going to stay put roughly around $106, $107. We'll see if Amazon can actually break out above that resistance, above that lower high, or if it continues to trade sideways and starts to pull right back down. So that is going to be that next resistance to pay attention to for Amazon. Tesla, up over 72 basis points, still getting rejected at $200. It's just not able to break past $200. That is a pretty substantial resistance for Tesla. So this right here is going to be that level to watch. And, we've been gotten rejected at that level not once, not twice, but 3 times now. And we're just going sideways at those prices. Of course, my fair value stays put at $125, $130 in and around those levels for Tesla. Talking about NVIDIA just absolutely does not care what's going on in the world. It just wants to go higher and higher, and $292 is going to be that resistance. So this right here is a level that we are paying attention to for NVIDIA, and previous resistance exactly sitting at this price from back in March of 2022. So it's been exactly 1 year of NVIDIA just going down and then going right back up. So it's if you take a look at from March 22 to March 23, it hasn't really gone anywhere, but of course, during that time, it has dropped 62% and it has rallied over 151%. So just absolute incredible amount of volatility in the last 1 year. And resistance is going to stay put at $292. That's the next target that I'm watching for this absolute insanity. Talking about advanced micro devices, AMD continues to push higher as well on the back of other semi stocks. 1.86%, a little bit under $98. This is going to be that higher high or that resistance to watch for advanced micro devices. And of course, we got a resistance staying put at roughly around $102, $103 per share. And support level is going to stay put roughly at this higher low, sitting roughly at $76. We're still in the context of this uptrend. So an AMD still is in this higher high and higher low pattern. And this right here is going to be that next support if and when we drop down and get a pullback on advanced micro devices. Resistance is going to stay put roughly at 102, 103. Talking a little bit about PayPal, and PayPal here on the day was also very flat, not really moving much, lots of consolidation, lots of back and forth. So resistance with the descending triangle over here staying put at roughly around $78, $79, and we got a fair value sitting for me at roughly $70 for PayPal, and support at roughly around $67. Talking about Square, and Square here continues to push higher, getting a nice recovery back up after the short report and trading back over $68 per share. That's a very, very solid move from lows of about $55. It's already rallied 22-23%. The week candle absolutely is incredible, up a little bit over 12.87%. But for the most part, also just consolidating sideways in that range where it's just been pretty much trading between $89 to as low as $55. So that is pretty much the range within which Square has been trading at. So lots of consolidation in that area for Square at the moment. So support level $59 and big resistance sitting roughly in the 80s, low 80s for Square. Talking about Meta platforms, and Meta here on the day was up another 1.21%, pushing past $207 and continues to validate this as a very strong support. It's in roughly at $202. And the next resistance really is going to be at $222 per share. So this right here is going to be that level to watch for Meta moving forward. Talking about Netflix, and Netflix here up another 2%. So this is the analysis that we conducted previously, and it continues to follow through. Next target and resistance staying put at $380, kind of in line with this level over here. That's a previous resistance that we have been validated at. And right now, of course, we're seeing a very nice move back up, with also the daily candle, the daily chart looking very oversold and overbought. Oversold on the RSI and the MACD. So now we're starting to see some momentum back up, and my target, of course, is going to stay put at that red rectangle, sitting roughly at 338, or roughly at $379 to $380. Talking about Google, and Google continues to underperform. It's not really finding that momentum as Nvidia or AMD or Apple or Tesla or any of these other companies, but really just coming down after being incredibly overbought. So now we're starting to pull right back down. Support level is going to stay put at roughly $100 to $101 per share for Google. And of course, my fair value is going to be sitting roughly in the low 90s for this company. So it did see a bit of a breakout here from this lower high, but it's just not able to follow through on that momentum or continue on that momentum up, and resistance at $108 per share. Talking about Microsoft, and Microsoft on the day continues to push up. It was green another 1.26%, pushing past $284, and the next resistance is going to stay put roughly at $292 per share for Microsoft moving forward. So very much a strong momentum for Microsoft. My fair value is going to stay put roughly in the 230s for this company. And last but not least, we got Shopify. Also slightly down here on the day, continues to trade in this uptrend. Higher low is getting validated here. And this is a gap that it needs to fill. In fact, it got rejected exactly at the same price as it did in the past before. And right now, we're kind of struggling to fill in this gap for Shopify. Support level is going to stay put at this higher low, even as low as $40 per share for this company. So hope you guys enjoyed this video and a complete update on the markets. Tomorrow is the big day for inflation, and overall, the markets here continue to push higher on a lot of momentum and just a lot of positive sentiment all around. And we're getting up to that resistance at the moment for S&P. That's going to be somewhere between 4,100 to 4,200. And the NASDAQ, that's going to be somewhere between 12,200 to as much as 12,300. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. As always, happy investing, and I'll see you all in the next video.